All right. By the end of this video, I will have shown you two gold metrics that look very bullish today. Now, before we begin, welcome to the Black Bullion channel. Please hit the subscribe button if you're new. Also, please hit the like button. And if you want to get a quick video synopsis without having to watch the full thing, check it out in the description below. So, first, for these two gold metrics, let's take a look at the gold price chart. So from the bottom on March 19th, take a look there. You may notice that we had a shape of a flagpole with a pennant. Now take a look here. It's a bit of a flagpole, but up here you have a flagpole with a pennant. Now, you may not see this, so I'm going to trace it a little bit better. So take a look. This is a flagpole. And at the top, you have the top of the flagpole. And here's the pennant. It comes down a little bit and at an angle. And then it comes back like this. This is the pennant. But this is the flagpole right here. Now, this pattern in technical analysis is called a pennant. And after the initial bullish climb, you'll have a short period of consolidation in gold pricing before the price continues to rise, in a continued bullish pattern. And this creates the initial flagpole that you see here and the pennant that you see here. Now, you may be wondering, well, so what's the psychology behind this? So this is the psychology behind the bullish flag formation and the pennant. So I'm just going to read this really quick right here. The shape of the flag is not as important as the underlying psychology behind the pattern. Basically, despite a strong vertical rally, the stock refuses to drop appreciably. As bulls snap up any shares they can get. The breakout from a flag often results in a powerful move higher, measuring the length of the prior flagpole. Now that's important right there. The breakout of a flag often results in a powerful move higher, measuring the length of the prior flagpole. So the next jump should take us to a price that measures the length of the previous flagpole. So let's look back at the chart here. So anything from pretty much right here going up should measure the length of this flagpole. Now, you may be asking, well, what could that possibly be? And if you take a look at the pricing here, just going to go down here. This is the bottom of the flagpole. We were at $1578.93. And at the top of the flagpole, we had $1726. So whatever this range is, that's where we could possibly see the next pricing for gold. Now, when you subtract 1578 from 1726, you actually get 158. Now, where do you add 158 onto? So I'm actually going to add it onto this period right here. And this is like the little bit of this is the inflection point right before it went up. So right here you have 1698. Now, what happens when you add 1698 to 158? You get 1856. Now, to me, that number is striking. And you may ask why. Well, if you saw my previous video about gold forecasting using Fibonacci retracements, you might have seen the following resistance levels. Check out these resistance levels of 38.2, 50%, and 61.8%. Now, I just said that we could see a price of 1856. Around my 50% level, I said that we could see a price around 1853. So literally just $3 off. But that's not the craziest thing. Check this out. So if you add 158 onto the price at the top of the flagpole, which is 1726, you actually get a number that is literally $1 more than my price at the 61.8% level. That's right. You actually get 1,884 when you add 158 to 1726. That is literally $1, or I should say 5 cents more than where I had my 61.8% level in my Fibonacci retracement analysis. So that is insane. And it just blows my mind how crazy, these numbers can kind of stack up from time to time. Okay, so the bullish flag pennant pattern is just one of the metrics I promised that I would show you guys. The second metric is actually something called the RSI. So what is the RSI? That stands for the Relative Strength Index. Now I'm going to read this very quick definition here. The RSI is a momentum indicator used in technical analysis that measures the magnitude of recent price changes to evaluate overbought or oversold conditions in the price of a stock or other asset. The RSI is displayed as an oscillator and can have a reading from 0 to 100. Now I'm going to skip down here. Traditional interpretation and usage of the RSI are that values of 70 or above indicate that a security is becoming overbought or overvalued and may be prime for a trend reversal or corrective pullback in price. I'm going to stop right there because that is very important to us. Why? Because of this. Now, you may see here on this graph, this is actually an article from Kitco called Gold Bullion RSI, a Massive Buy Signal. This came out today on May 20th, on Wednesday. Now, up here, between this top line and this bottom line, this is the RSI Oscillator. These open green circles indicate periods of time when gold touched 70. Now remember, when a stock or any other asset hits 70 and goes above 70, that will start to indicate behavior that stock or that asset is becoming overbought. Now, take a look at where we are today. We are literally now touching 70. So, if you are thinking like me, based on that pennant behavior I just showed you from the first metric, based on other metrics that we've been talking about, if you've been following the Black Bullion show, you know that I see gold going up. Now, here's the important thing. After gold goes above 70, it will indicate behavior that is overbought. So right before the end of, or I should say right during recessions or right after recessions, or pullbacks, I should say, you will then see gold going above, obviously, the 70 line. And that's where you see gold right here indicated in the blue. Now, here's the important thing to take note of, because we want to know exactly when gold tends to pull back from the top. Now, if you take a look at historical behavior, this is from the recent, the Great Recession. This is from the 80s, or 1980. This is from the 73 to 75 recession. So if you take a look at where these tend to touch before coming back down, this one's a little bit above this horizontal line that I'm showing here. This one's touching that horizontal line a little bit. Gold tends to pull back once it touches or goes just above 90. So if you have any way to get in touch or get your hands on an RSI oscillator so you can pay attention to this behavior, then you should know when gold will begin to touch 90 so you can prepare yourself to potentially take some risk off the table and maybe do some selling. Right now, this is the time to buy. This might be one of the last opportunities for you to buy. Now, just because it's touching doesn't mean it won't come back down. Take a look at what happened here. It touched 70, then came back down, gave you one more chance, and then it went back up again above 70, and that's where it stayed for several years before hitting 90 and then coming back down again. So I just gave you these crazy two metrics that show, at least to me, that gold is poised to go higher. So if this video showed you something new, please consider subscribing if you are new to the channel. Also, please consider liking the video to help get this economic evangelism out there to the masses. And let me know what you thought about the video in the comments section below. All right, guys. Thanks again for watching. It's Black Bullion.